Welcome, viewers. Welcome to our regular NFO discussion series, where we speak with the top management, top hierarchy of different AMCs and understand the brains and the logic behind bringing this new fund into the market. Just like that, we have today with us Mr. Chirag Mehta, who is the Chief Investment Officer of a Quantum Asset Management Company. Welcome to the talk, sir. Very good to have you here.
Thank you, Abhinay. Pleased to be here. Thank you so much.
Okay. Just a brief introduction about Chirag sir, as he will be discussing the very interesting quantum ethical fund. Is that Chirag sir, stands as a distinguished figure in the financial industry, serving as the chief investment officer at Quantum Asset Management Company. With a tenure spanning across 2 decades, he brings a wealth of experience and expertise to his role, specializing in asset allocation, sustainable investing, equities, and alternative investment strategies. Since taking charge in Quantum Group in 2006, he has played a very pivotal role in shaping the organization's investment strategies and fostering a culture of responsible investing. That's actually the key point here. And notably, he manages the Quantum ESG Best in Class Strategy Fund, which stands as India's pioneering responsible investment strategy built on a proprietary ESG, that is the environmental, social, and governance framework. So exciting to have you here, sir. And I'm very, interested in knowing what this, quantum ethical fund is all about. So, without much further ado, I think I'll just dive right into the question. Is that what inspired the development of this fund, that is the Quantum Ethical Fund, and how do you see it addressing the gaps, in ethical investing within the Indian market?
Sure. So if you see, there are a lot of investors who approach us who want to align their investments to their values, beliefs, and ethical ideologies that they want to pursue. So they don't want to delineate in terms of their investments. They want to ensure that, how much they earn and how they earn is equally important when they make their investments. And hence, to cater to those investors, we think that we have the capabilities given we have a strong thrust on governance. And when
Mm-hmm.
you are good at examining and assessing governance of companies, you tend to have that bias towards more moral, ethics, conduct, etc., into how companies are conducting their businesses. So I think it
Correct.
was a great fit for us in terms of a requirement for investors that we could cater to, and
Mm-hmm.
at the same time having capabilities to pursue that and deliver a product that makes work or makes sense for investors. Because many times it is a misconception that if you do more than looking at investments the way we have been doing it traditionally, by
Mm-hmm.
looking at ethics, looking at how the company conducts its business, etc.,
Mm-hmm.
you may have to compromise returns, but in reality that is not really true. You can make money while doing good as well. And we think that responsibility and profitability go hand in hand, as
Mm-hmm.
opposed to be a complementary trade. So if you were to look or delve deeper into many of these aspects, many of the ethical ideologies tend to overlap a lot amongst each other. And hence, and what they really look at is looking at businesses that they don't conduct or cause harm to the society or the environment, etc. And hence, from a risk standpoint as well, many of these have risk of government policy, risk of regulations, change of consumer preferences, and hence they lead to lower risk when you're investing in businesses with that lens. And at the same time, when you have combined with the right things in the totality, you end up ensuring that you also earn return for investors.
Okay. So the next question, sir, is, can you elaborate a little bit more on the proprietary screening framework, that is used to evaluate ethical and the integrity parameters of potential investments? I think that's a very key area that our viewers would like to know.
Sure, absolutely. So, if you were to look at, as I said, many ethical ideologies or values and belief systems, there are many commonalities. Like most of them won't approve investments in sin sectors, like, for example, tobacco, gambling, alcohol, etc. So you tend to
Correct.
avoid those. Then many of these ideologies have well laid down either business activities that they don't want to invest into, or they have
Mm-hmm.
principles which allow you to define what sectors or business activities that they fall under. So you create an
Mm-hmm.
exclusion list at the top, which defines your universe in terms of businesses that you need to exclude from your
Mm-hmm.
universe to arrive at what will
Mm-hmm.
make or a universe in some sense that excludes the unethical businesses, or I would say that it includes all the ethical businesses in that manner. Once you arrive at that universe, you do a screening in terms of, okay, you are ethical. Let me check in terms of how you have treated the stakeholders that you perform business with, be it
Mm-hmm.
the shareholders, be it the employees, be it the society at large, or the environment in which they operate. So overall, businesses don't operate in a vacuum, and there are different stakeholders that revolve around that company, and how they kind of cater
Correct.
to those stakeholders tend to ensure that how longer that businesses will do well, and therefore have that edge that
Mm-hmm.
really generates returns for investors. So that
Okay.
integrity checks that we have will define how well the company is governed in terms of looking at the details of those businesses, in terms of how they have treated minority shareholders, how they have, what is the company structure that they have, in terms of is that a clean, transparent structure that they have or not.
Mm-hmm.
Do what kind of related party transactions that they have, what kind of board that they have in terms of independence, and committees that they have as independence, because they tend to safeguard the interest of shareholders like us, and hence those become most important traits that you look into businesses. Businesses will of course go through cycles, and how the companies navigate those cycles is dependent on how good the enabled that company board is, how good enabled the company's management is, and therefore they execute that better over the long run.
Okay.
So that integrity check looks at about 200 odd parameters when you look at assessing companies' governance, how they behave with other stakeholders like the society, the environment, etc. And we arrive at what businesses are good in terms of our assessment. And
Mm-hmm.
it's not only desk research; it's about on-ground assessment in terms of gathering on-ground information about what the company does and says is the same thing or not. So
Correct.
you may believe on disclosures, but companies have all the incentives to misguide you through those disclosures. And hence, it is really important to test those disclosures on the ground.
Correct.
So that
So
helps
then,
us in terms of
okay.
getting good business that we
Okay.
think is worthy of your investments.
Okay. So the next question is actually, the opposite side of the things is that, what are the challenges that you face when adhering to these multiple ethical frameworks, different principles, value propositions during these stock selections?
So yes, there are many multiple ideologies that we need to cater to in terms of having a broad approach that we have, and
Correct.
hence it may look a lot more in terms of granularity. But if
Mm-hmm.
you were to when we started looking at this, there was a lot of overlap that came through, which really resolved our initial inhibitions in terms of whether it will restrict the universe too much in terms of when we look at selecting stocks for the portfolio from there. So
Correct.
it was not really boiling out to that effect. There were, for example, in India, you have about 7,500 odd listed companies, and hence such a large universe becomes such a large opportunity set for us. Even if
Okay.
we were to exclude certain businesses out of the ambit because of they don't meet our ethical criteria or certain ideological
Mm-hmm.
constructs,
Mm-hmm.
still it remains a good, healthy set. To give you an example, we have a liquidity criteria which makes any company that trade at least $1 million a day on an average for last 12 months
Mm-hmm.
becomes part of our universe. So
Correct.
from that, it's about 1,000, 1,100 odd companies that meet that criteria. Even if I were to apply the strictest of ethical exclusions, still I will come to about 300, 400 odd companies that I will have at my disposal to select and construct the portfolio from. So,
Okay. Okay.
given that despite having all those exclusion criteria on an ethical front, we
Mm-hmm.
still have a sizable universe, and therefore there is no dearth of opportunities for us to select stocks from.
Okay. Actually, sir, you kind of answered my next question that was about the diversification given that you're excluding certain industries. But I mean, if you would like to add a little bit more on diversification across
No, as I
sectors.
said, there is no need to, frain about that while investing with my values. It may compromise on the return potential because the opportunity set is not small. It's a
Correct.
very large opportunity set you still end up having, and
Mm-hmm.
hence, if you combine right things within the portfolio construct, probably you end up making a good diversified portfolio at one end, and also the portfolio that generates wealth over the long run.
Okay. So the next question then is about, what are the different methodologies that you use to measure the long-term sustainability and the governance of the companies in the portfolio?
As I said, we have a very strong integrity framework that we use to evaluate companies. And as I said, it's not only desk research, our analyst, and we have a dedicated team doing that at
Mm-hmm.
Quantum. So we have
Mm-hmm.
a 8-member team who does that integrity test at Quantum, and they do a deep dive into companies' business activities, not only today but over time, to ensure that companies are meeting our threshold criteria. So we have a saying, right, that if you shake hands with someone and if you don't get your 5 fingers back, don't shake hands with that person again. So
Correct.
if company has cheated investors in the past, probably it takes a long time for us uh, to see if the company has really changed or not. Until
Correct.
then, we
Mm-hmm.
refrain from investing into those companies,
Okay.
because
Okay.
once they have done something, there's always a possibility that they will again do something similar
Correct.
that defrauds you as minority shareholders. So
Correct.
so we want to ensure that companies meet our integrity checks, which are very very
Correct.
detailed. As we our analysts go through about 200 odd parameters to assess companies. Plus, we
Correct.
do a lot of ground level checks in terms of trying to validate the data points that a company gives us. So if there are any red flags, we don't invest
Mm-hmm.
into those kind of companies.
Okay.
So our methodology has evolved over time, and
Mm-hmm.
probably it's become more robust over time, and
Mm-hmm.
hence we think that our integrity checks will ensure that only quality companies meet our muster, and
Mm-hmm.
hence we have seen that over time most of the companies that delivered on the stock markets, the quality companies that have done well. So
Correct.
so we think that integrity check is a form of ensuring that companies are lesser risky, and
Mm-hmm.
at the same time quality companies that will help you have a good portfolio at the end of the day.
Okay. Last couple of questions, sir. In the scenario where a company's, ethical practices come into question, actually, I mean, you talked about it. So how quickly the fund can adapt to divest or adjust its portfolio?
So whenever there is an ethical practice that comes into question, sometimes it is straightforward, sometimes it is controversial. So if it is controversial, we try to seek answers from the company in terms of what it is really pertaining to,
Mm-hmm.
and if we don't get a good answer, probably then we will look at divesting. At sometimes we
Okay.
may even escalate it to the board level, and then seek answers from them. And if we
Mm-hmm.
don't see any action forthcoming or a good response from the company, probably we will divest out of those companies. So we
Okay.
could see, as I said, when that becomes a concern, when there is lesser liquidity on those stocks.
Mm-hmm.
Whereas we
Mm-hmm.
have the liquidity criteria right at the top. The
Correct.
companies
Correct.
that meet our liquidity criteria will only be included in the portfolio. And hence, from that perspective, we can sell any of our holdings at any point in time. That will not be a worry in terms of the liquidity of the stock.
So a quick word on the, portfolio construction. I mean, you did, mention the addressable universe and the initial ethical screening. How does what are the next two steps that are involved in this process?
Sure, absolutely. So, as I said, we start with the liquidity criteria, then we have the exclusion screening. So, that makes our universe of about 350, 400 companies. Then we run our integrity checks for about 200 to 50 companies.
Mm-hmm.
And after that, whichever companies score high on our integrity checks, we look at, because we want to ensure that company may be good, but at the
Mm-hmm.
same time make return for our investors. So how
Mm-hmm.
do we do that? Is to have a check on the financials of a company. So we
Okay.
will thoroughly check in terms of how sound the financials of those companies are, not to take a
Mm-hmm.
valuation call per se,
Mm-hmm.
but to ensure that they are good financial investments as well. So we
Okay.
look at generally broadly to give an example about two, three things in a company that helps us evaluate them very closely
Mm-hmm.
amongst the list of things that we'll see. So we will look at what is the state of the balance sheet, what's the health of the balance sheet of the company.
Mm-hmm.
So we look at leverage ratios in terms of how the company is levered. So if they have more debt, we will tend to avoid those kind of companies.
Correct.
Second is
Correct.
we look at what kind of capital allocation decisions the company has taken in the past, whatever
Mm-hmm.
capital they had, how they have deployed, and the measure of that is what kind of returns they enjoy over the invested capital. So there's a measure
Correct.
called return on invested capital or return on capital employed, which we look at it in terms of over history, in terms of evaluating that if the company is good at utilizing the opportunities that it has had at hand or not. And
Correct.
third is we look at the company should be making profits. So many companies will generate top line revenues, they will grow on
Mm-hmm.
the revenue front, but it does not translate into returns and free cash flows for investors or profits
Mm-hmm.
and free cash flows for investors. So we need to ensure that there is growth in form of profits and free cash flows at the end of the day to ensure that company can sustain going forward. And hence, all these checks help us ensure that while being good, it is also a good investment for investors.
Correct.
So these are the checks that we do to ensure the combination of these four factors or four pillars, as we call it, liquidity, ethics, integrity, and financials, is a great combination to drive that long-term returns that investors are looking for.
Okay. So the last question is that how does the quantum ethical fund distinguishes itself from the other ESG or thematic funds in the market, and what is the unique value proposition of this fund?
So yes, many of the ESG funds will have some exclusions, but here, if you see, the exclusions are very different in terms of it's more aligned to values, beliefs, and ethical ideologies, as opposed to saying that anything that harms the environment or society only gets barred
Mm-hmm.
at the ESG front. So there'll be different ESG funds tend to have different exclusions, but
Correct.
here, the exclusions are very, very different and more encompassing as compared to an ESG fund.
Mm-hmm.
And coming to a differentiation, I don't think there is any fund in India that has such a broad ethical construct as we have in this fund. So it would be probably the first of its kind to have such a broad ethical construct that caters to people from different ideologies and belief systems as well. And at the same time, the robustness that we have built in terms of the integrity checks or the financial checks that we've built in, it makes a good proposition for investors to look at this fund.
Okay. Thank you so much, sir. Thank you for giving your time. I would like to, inform our viewers that the Quantum Ethical Fund is an open-ended equity scheme following an ethical theme. The NFO opens on the 2nd December 2024 and is open till 16th of December 2024. We wish you all the very best, sir. Hope the fund gets great response, opens to a great response, and gets oversubscribed. And thank you so much for talking to us, sir.
Thank you, Abhinav, and thank you, Asset Plus, for doing this. I think investors will have avenue finally to invest with their values, beliefs,
Correct.
and ideologies, which was not the case earlier. So let's get to create long-term wealth at the same
Yeah.
time, not compromise on the values and belief systems.
Yes. Thank you so much, sir.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.